is now a brand new month. We see a ton of progress both by the private sectors and the government trying to reverse the COVID dip, get our economy back on its feet. I think it's finally time to talk about casinos. In this case, we're going to talk about a very specific one that's a little bit less obvious, but we're going to talk about its differentiators, why it has value right now, and how it can work for your portfolio in the next 3 to 6 months. Let's talk about gambling on gambling. If this is the type of content you've been looking for, please hit the like button and let's get started. So there's only about a handful of publicly traded casinos out there. And that's because a lot of these casinos have consolidated into giant holding companies. You have the MGM who owns like 18 different properties on the strip alone. You have the Wynn, you have Caesar Palace, who I think is super exciting because, they're acting like Julius Caesar. They have conquered and spread all over the globe, having 19 different properties in Egypt, Canada, all of these places, and less well-known places as well. In this particular video, we're actually going to focus on a less well-known brand name, Eldorado Resorts, ERI. And it's not just because Carl Icahn convinced them and Caesar Palace to make sweet, sweet love for $17 billion. It's actually because I think they have a particular business edge right now. That's also why it makes it a very interesting short swing trade during this particular time period. Generally speaking, if you look at casinos, they're kind of like real estate. As long as they are met up to a certain standard, they have the right amenities, it's all about location, location, location. But because of the COVID crisis where everybody's locked down and there is a legitimate fear about traveling, I am hypothesizing that there is an additional edge for casino brands who have resorts in less touristy areas. What I'm really saying is that these casinos, they attract local gamblers. Unlike the Vegas Strip, where the majority of the traffic is from outside, if we're talking about places like Louisiana and Missouri, where, I don't know anybody who goes there to gamble unless they live there. So as long as they can open, and as long as they can get the locals back into the casino, then I think they can get kick-started before the Vegas Strip. And that is effectively what Eldorado Resort is, and also to a certain extent what Caesar Palace is. Since the casinos are just starting to open, it's a little bit speculative, I agree. But there are plenty of news out there that's saying that people are literally waiting in line trying to get into casinos. Even with the occupancy cap, people are willing to go there, wait in line, and gamble because they are that antsy about, outside interaction, getting back to their routine, etc., etc. I also hypothesize that the casino business will not be dramatically affected in its comeback by the occupancy limit because the limit is around 30 to 50%. And we all know that in most industries, you have 90% of the revenue generated by 10% of the high rollers. So in this sense, as long as they can attract the high rollers back by incentives and promotions and safety precautions, as long as they don't mess up the safety issue, I think they have a great shot in coming back very, very strong, very, very quickly. The second reason why I think that Eldorado Resorts is a good bet is because of the merger between them and Caesar Palace. They put out news that this merger will probably close in June, which is why we're talking about it right now. But also I think there's a very strong component that the analysts are undervaluing, and that is the economy of scale. So the Eldorado Resort already has bought Tropicana in 2018. And they bought it because they believe that there is an economy of scale. So as an example, if you imagine a business needing to buy 100 plates to operate their business, that's not many plates, so they probably will end up paying full price to a seller. But if this business actually has a need for 10,000 plates, then they have a bargaining chip for volume. They'll have a huge discount, and also, distribution might be easier in terms of shipping costs, etc., etc. So that is the idea of economy of scale, right? And if you extend that further into employee training, into food and beverages, into marketing, and also into the entertainment that these casinos have the clubs built in, if you account for all of them, I think that the economy of scale will work really, really a lot better than people think. Even Eldorado Resort themselves estimated a $500 million in savings And I think that there's no reason for them to make up that number when they've already done a test run when they bought Tropicana. So there are a couple of downsides that you need to be fully aware of. Combined between Caesar Palace and Eldorado Resorts, there's more than $10 billion of debt. And so if this COVID extends way farther, or if their relaunch doesn't work out well because of safety issues, whatever it may be, if they fuck that up, then this company, I don't know how it's going to survive without bailouts. And we never know how bailouts will work out, right? So that's the number one concern. The second concern is that I'm not 100% sure whether this deal will close smoothly. I mean, they're dealing with international organizations here, right? There's a lot of moving parts. And so as long as this deal goes smoothly, I'm super, super optimistic. But then again, I'm willing to bet that there's a ton of casinos betting against this move because they'll become one of the biggest casino holding properties out there. That is in itself, dangerous for other casinos to operate successfully, right? So that is an additional point to watch out for. But if you're concerned about that as well, I'd assume you can just wait till past June. If you don't hear good news, then perhaps find some other less risky stock to invest in. If you look at their financials, both Eldorado Resorts and the Caesar Palace Casino, they're both doing very, very well. And so it gives me confidence in investing them for the short term. That being said, we all know that entertainment businesses, a lot of them is going to struggle during the recession as well. So in that sense, I think this is a good bet for a short-term investment. I think we're going to see gain in the next 2 quarters. I think we're going to see a merger if it happens in the next 2 quarters. And therefore, I think it's going to be an interesting investment to hold for the next 3 to 6 months. As a long-term investment, I think you should look at an investment that has more stay. And we're actually going to dive into that in the next video I make. So please stay tuned. I hope you found this content useful. If you did, please hit subscribe so that you can get my next video about what industries you should be investing in during a recession time or right before the recession so that you can get yourself a head start. Thanks for watching, and I look forward to working with you next time. See you. It actually irritates me when businesses don't have a differentiator. It's all about like location, and marketing. That, as a product manager, really annoys me. I mean, even if Planet Hollywood starts offering exclusive Harry Potter slot machines, will that really draw you in? I think. But on the other hand, can't you do something along the lines of, offering a table with even odds, but limited number of seats? So that attract people into your casino. You might be losing or breaking even on that one table, but then you're attracting so many more, people into your casino, right? Doesn't that make sense? I don't know. I'm just guessing here. Thank you.